is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Thursday morning. We got about 24 minutes to go until the start of trading, and right now you got a pretty calm market coming into the opening bell. We've had some wild action this week. Tuesday's action really accelerating to negative prices of 41.20. Yesterday we chop around, quite the acceleration intraday. You had the lows at about 10.20. We rise to 41.80, and just like that, by the end of the day, we were back down to about 41.55. Folks, it almost happened the same way overnight. We trade up to 41.75 overnight. We give it all back by the opening bell. Right now, you have the S&Ps flat at 41.59. Tech stocks negative 16 points. In the NASDAQ 100, 13,475. How about the Dow making an all-time high yesterday, 34,219. We're right up near that level at 34,154, and the Russell is flat at 2236. Gold continuing to accelerate higher, almost up near those highs we had on Tuesday of 17.99. Today we make it up to a high of about 17.95. We're trading 17.91 right now. Silver's up 36 cents at 26.89. And notes and bonds, a little bit of a pullback from the spike we got. We're trading at 132.18. We're flat right now. We were up to 132.24. All right, let's jump into the action. As I talked about in the morning and the update I just did at 9 o'clock, the big number this morning out there, unemployment claims, a pandemic low, 498,000 last week. It would make sense we really start to see that. I mean, think about, though, that's still people right now filing an initial claim of almost 500,000. Some weakness still in the economy for sure. Those numbers, as of the weekend in May 1st, the median estimate was for 538,000. The prior week revised upward to 590,000. So we drop about 100,000. Not bad for the week. If that trend continues, you see it on the chart, a pandemic low. Remarkable when you think about some of those weeks. We were talking about 6 million, 5 million on the unemployment claims initially. Job market strengthening, filled positions. You had claims falling broadly across the U.S. The biggest drops, Virginia and New York. Continuing claims for ongoing state benefits rose slightly. Now, those numbers 1 week delayed. Those are for the week ended April 24th. And then they continue. Separate data Thursday showed productivity rebounded in the first quarter as the pace of output exceeded the pickup. Non-farm business labor productivity increased 5.4% annualized rate first quarter. We got that number out this morning as well. So we jump from that. We take a look at the market. We'll jump back to the S&Ps this morning. That number out at about 8:30 in the morning. And as you can see, right, no real reaction there. We're within a point of where we were. You got about 2 points of S&P volatility right now. You're not going to drive too much action. That number not going to drive too much action ahead of tomorrow's number, which is the non-farm payrolls for the month of April. Much bigger number. Yeah, that's a good number at 500,000. But when you talk about an expectation of 538,000, we come in at 500,000. Tomorrow's where the volatility could happen, folks. We're looking for a number of about 1 million jobs added in the month of April. We are coming out of the vaccine, but this is a volatile couple of months in terms of the expectations. Do we meet the expectations? Does the success we've had with the vaccination so far lead to more jobs maybe coming back quicker than we thought? Does the vaccine hesitancy that we're seeing now potentially lead to less jobs? We're going to find out tomorrow. 1 million jobs is quite a number. Some of the estimates as high as about 2.1 million jobs added. I think I saw a Jefferies analyst out there. On the lower end, the lowest number they're looking at is about 700,000. We find out less than 24 hours from right now, but as you see, the market just taking this in stride. We got some earning stocks to jump to, as I talked about. Let's jump to Uber shares. So Uber, out with their numbers, they missed on revenue, and that's what they paid for last night with their numbers. Now, Uber's really had a tough week, folks. We have some Uber in my newsletter. It's been a nice run. We were in here last year and caught the whole run of it, so we've given back some of those gains, but all we're doing is pulling back to the kind of lower end of this consolidation. I had this on this chart prior to that. We've been chopping around in this area basically all year, right? From the beginning of January, the lower end is 50, the upper end is about 60. We made it above there for a couple days, but boy, we gave it all back in about 5 trading days. You start things off in terms of talking about potentially dealing with some woes in terms of the labor secretary, talking about gig workers. Then you have the Biden administration turning back on a rule. That's the same thing, gig worker versus contract employee versus employee. And then you have their earnings pulling back. So we're going to open at 48. It's not 48.50. Critical area, we were down here on January 27th, but we'll see how this thing holds in terms of you have a low back here in December. That low on Uber, 48.79. So we're going to open just below there. And then pretty similar areas of where we're going to open. Interesting that you're talking about skipping across the lows we had going back all the way to November after they really crushed it out of the park in November and the efficacy of those vaccines came out. But Uber going to open lower on their numbers, getting into the numbers in terms of what they had to say. So first quarter results, Uber, net loss of 108 million. Now, things are always skewed when they're talking about comparing numbers, folks. Tremendous improvement from the $968 million loss in its fourth quarter. Well, yeah, the world's a lot different place, folks. The prior quarter they're reporting versus 3 months prior to that, right? The company said, and also a critical one, not in Uber's favor, that the net loss benefited this quarter from a $1.6 billion gain from the divestiture of its self-driving unit. Well, geez, you take that off the transaction list and not quite a profitable quarter, not quite a net loss of 108 million, even close, as they benefit from $1.6 billion transaction. Now, where they really missed is revenue, not what you want to see. They missed by $400 million over the period of 90 days, $2.9 billion versus $3.29 billion. They lost, as that translates, they only lost $108 million. That translates to 6 cents versus 54 expected. But as we talked about, a big part of that was the $1.6 billion sale of its self-driving unit. They reaffirmed its expectation to reach profitability on an adjusted EBITDA basis by the end of this year. That is pretty encouraging. Boy, you look at what they've done in delivery on this company. Mobility, that's talking about ride sharing, $6.77 billion. This is gross bookings. Delivery, $12.46 billion. Now, it's a little bit skewed here because a gross booking on a grocery order is probably not the same as a gross booking on a ride order, and it's definitely not the same as revenue, right? Because it might be revenue, but that's not revenue to their bottom line at all. That's just a gross booking. Their cut's nothing like that. But still, pretty amazing that their delivery business now doubles the gross booking of their mobility business. Delivery revenue outperformed its core ride-hailing business at 1.7. Okay, so there's the revenue side of things, aside from gross bookings. Really getting into the numbers, but this is an interesting one because I'm biased. I have some Uber. We have some Uber in my newsletter. But this is economy-wide. I mean, you're going to talk about, number one, it matters to these companies, but it also matters how quickly Uber and Lyft come back, because once they get back, that means the economy's rocking. That means people are out. They're traveling. They're heading to restaurants. They're heading to nightlife, et cetera, whatever it is. Airport rides, all of it. Delivery revenue outperformed the core ride-hailing business, $1.7 billion compared with $850 million. I mean, pretty similarly, they just dwarfed it in a big way. It looks like they're pulling in revenue to the tune of about 12%, give or take, of their gross bookings number. We're finally seeing the light at the end of the tunnel. Their CEO pumping it out on the call to investors, starting to fire on all cylinders. He's really cheerleading that one. Merchants on Uber Eats exceeded 700,000 in the first quarter. So some decent numbers for the future, but the market a little worried when you miss by revenue, rightfully so. Uber going to open in the negative today. Stay tuned, folks. We're going to be talking a bunch of earnings that we got out in the market right now. Stay tuned. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps flat right now. Tech stock slightly in the red. The Dow, did we make another all-time high in the Dow today? 34,162. The highs towards the end of yesterday, 34,220, bumping up right against that level. Jumping into other equities that we got earnings going on today. Etsy. How about Etsy? They are down big this morning, more than 9% as of this article. Reported better than expected earnings for the first quarter, but you never want to hear a but in that statement. Warned that it expects gross merchandise sales to decelerate in the second quarter. That means the multiples got to decrease for this company. That means it's going to trade lower due to tough year-over-year comps. I mean, not surprising, right? The year-over-year comps, very, very difficult for a lot of companies, especially probably a company like Etsy that's had the euphoric run that it's had. I mean, we were trading at the COVID lows of 31 and you traded to 250, folks. Coming into COVID, we were trading at a price of 60 and you traded to 250. So this morning, we're going to open at about 169. You're coming back to the lows of January 4th, that low 166. We did have quite an acceleration the week after that on January 11th. Really started that run to over $200, but this morning they're going to give it back. Etsy getting into the numbers. So they earned $1 per share versus 88. It is so tough to run a public company, folks. It's earnings season and the expectations, it's pretty wild. They earn $1 per share versus 88. They take in $550 million versus $530, but guess what? Deceleration of growth. That's what the market cares about most right now in Etsy. And Etsy shares, you're going to open down about $15 on their stock, about 9% this morning. All right, folks, let's jump over to our man Kevin Hinks. Every trading day on Tiger TV right here at TFNN, folks, 11 a.m. Eastern Time, Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team at the TD Ameritrade Network breaking down the market action for the day, setting up hypothetical option trades, going over it all. It's a beautiful time of year. We got non-farm payrolls in the mix tomorrow morning at 8:30. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, this is the quiet before the storm. This is historically, Tommy, a day that is a little quieter than most as people look forward to the number one data point of the month tomorrow, which is non-farm payrolls and unemployment. And the expectations are pretty lofty for this number. You know, something around 940,000 is the consensus, but there's whispers of over 1 million. And Expectation for unemployment 5.8%, but Tommy, the expectations for wages are only up 0.1%. So again, we could be looking at really good, strong economic data with little or no inflation. So we'll see how that pans out. I think today, good numbers out of first-time filers for unemployment insurance today, below 500,000. That's good news. So, this day could be quiet. But, however, at the same time, it is earnings season, so some of these names will be moving, as you've already reported, Tommy.
Yeah, it's pretty wild, Kevin. This morning, of course, under 500,000, even less than the expectation, somewhere around like 530 or something like that. But the market just takes it and moves maybe a point or two in the S&Ps, right? As in the market's waiting for tomorrow, man, on that front, at least on the jobs front. And Kevin, has there ever been a time that the market, talk about the volatility that could ensue in terms of, has there ever been a time, number one, that the expectations are so grand over the next few months for jobs added on a non-farm payroll basis, right? And the market has kind of priced a lot of that in, at least with the S&P is trading at 4162 right now. Of course, they're pricing in some future growth acceleration, good times to be had. But number one, we have the expectations of 1 million jobs. And guess what? It's going to come right after that, right? As in, we're going to get May numbers at the beginning of June. There are going to be some grand expectations there as well. And just the pure volatility, the spread, like you talked about, of the whisper of maybe over 1 million. I said at the beginning of the show, I think we saw a number, maybe some analyst is on the high end above like 2 million, and the lowest number is about 700,000. Has there ever been a time, and traders love volatility, so that's kind of the back end of the question, that we have so much volatility of what could happen over the next few months in this market maybe as we come into the summer on top of that?
Well, Tommy, if you think about it, if you look back over the last 13 months, there's a lot of history packed into that year in terms of the shutdown of the economy and then the opening of the economy. Not in my lifetime has anything like this happened. Certainly not in my trading lifetime has you seen numbers like this. So, what it's going to be and what people have to understand is you're talking about the service sector that is, opening up at a fire hose water pace. Right? As people start to come back to jobs and people are hiring, and all you hear in interviews, Tommy, is people can't get enough employees. So this is a restart of a U.S. economy that none of us have ever seen before. And how the market manages that, well, it's been a frustrating last couple of days in the overall market with the data and the reaction. But if you look at the end of March and the beginning of April, ahead of earnings season, this market, flew into earnings season. And now that the actual data is coming out, the market's kind of stalled here. Not really surprising as it ran up into the number. So, there's just a lot of – this is not an easy time to be trading these markets as, markets are moving ahead of numbers and then not when the numbers come out. So we're going to get a big data point tomorrow. We'll see what that does to not only stocks but interest rates as well, Tommy.
It is pretty cool. They say the market is forward-looking, right? You explained it so well, man. The market, pretty brilliant recently in terms of getting ahead of a lot of these moves in terms of where the earnings are, getting ahead of the tech earnings in a big way, like you talked about, accelerating right into them, and then maybe giving back some of those gains, buy the rumor, sell the news type. The move was in there. They knew it was coming. Now it's out. Well, geez, now you're going to have to compete for the next 3 or 6 months in the same degree. And then you add in, my personal feeling, Kevin, people are getting vaccinated. Myself, this like a few weeks ago, I have a new son at home, so we had to be a little extra careful, man. And now I'm ready. I'm ready to go out, man. When's the family showing up? When are we doing 3 nights a week out at restaurants if we can? So it's pretty cool, man, just on a front like that. To see where we come, I think the expectations are large, but we saw it last month at almost 1 million jobs, and that was at a time that we're still coming out of this. So tomorrow morning we get it, of course, at 8:30. With all of that, Kevin, we have earnings going on as well. What are you guys going to be talking about on the program coming up at 11 o'clock?
Good names today, Tommy, to look at in terms of earnings. And that is, number one, a name that was big in the news yesterday, Peloton. And then we'll look at Square coming off the PayPal earnings. We'll look at Square and then Roku today. on fast market. So really good names today to look at.
Folks, come on. Listen to those three names. Peloton. I mean, that's the story on Peloton yesterday, Kevin. The story just for the whole year on Peloton, the run up.
Yeah.
And then the pullback, man. You guys got some good topics to talk about. And of course, Roku. I think I have 6 Rokus in my house right now, Kevin. So they better keep that YouTube app on there. What's going on with that, right? They're dealing with some woes in Roku. Well, listen, man, we look forward to the education. We look forward to the program as always, Kevin. And you have yourself a great show. Have a great weekend, man. And we'll talk to you next week.
Thanks for having me on, Tommy. Always a pleasure.
My pleasure as well, Kevin. Folks, tune in every trading day. You heard the names. It's going to be a great program, earnings season, on top of great day to check it out, because I'm sure they're going to be talking about maybe how that plays in non-farm payrolls coming up tomorrow at 8:30. Check it out, 11 a.m. Eastern time, every trading day, folks, live on Tiger TV. Head on over to our YouTube channel. You can subscribe to our channel there. Everything we do, we archive it as well. All right, we got 3 minutes to go until the opening bell. We got the S&Ps right now positive by 3 points. We got the Dow inching positive, 34,182. We're within 40 points of all-time highs on the Dow. Stay tuned, folks. I'll be right back for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We get the S&Ps up by 1 point right now. We got tech stocks slightly in the red, minus 15. You get the Dow positive by 81. Dow continuing to accelerate higher. Be interesting to see the action that we get today in terms of where we go ahead of tomorrow's non-farm payroll number. As we talked about with Kevin, excuse me. And as we talk about, a little bit of negative. S&P's just ticked negative 41.59, tech stocks minus 21. All right, let's jump around to some of the other stocks that we're looking at this morning. So we talked about Etsy. They're lower this morning. Let's jump to the two stocks we've already talked about. Etsy, they're getting a little bit of a pop on the open, down 8.2%. Uber, down about 5.3%, opening really where we were. Let's take a look at Lyft on the heels of that as well. Lyft, same deal, down about 3.5% on their Uber numbers last night. What else we have? PayPal out with their numbers. Profit per share, $1.22 versus $1.01. They brought in $6.03 billion versus $5.9. On the earnings call, the CEO pointed to cryptocurrency as a key growth engine and touted an upcoming digital wallet product. That's a little spicy. PayPal shares spike higher on that news last night with their earnings pulling back, giving back some of those gains, still up about 2.1% on their earnings last night. Now, Square, pretty similar action on PayPal. You spike higher last night, you give back some of those gains. Square, I believe, as Kevin mentioned, they're going to be talking about it on Fast Market, and they are out with their numbers tonight. Square, you're pricing in about a $13.64 move right now on their earnings, a $233 stock. We look at, what else did we just talk about? We're coming out with Peloton. Out with their numbers, you're pricing in more than a 10% pop right now. Now, interesting in terms of you have the volatility of the earnings event, which is priced in there for sure, but you also have the general volatility of a stock where they just recalled a substantial amount of products in terms of their treadmills, which I guess have been shown to kill children. Not what you want to sell a for-profit product for, folks. So they take that back. Nonetheless, Peloton, we're up. They're pricing in more than a 10% move on their earnings. And Roku, yes, Roku out with their numbers as well. There's a move for you. $24 on a $290 stock. Roku down about 3.3% coming into their earnings today. Roku's been quite a slide as well. From 486, we're back down right to the lows we had in March, folks. That low, 292.92, I believe. Is that the low? Yes, it is. 292.92. And we're trading within about a couple bucks there. 294.64 right now for Roku coming into their earnings. And we'll see how that shakes out. In terms of last night, Papa John's out with their numbers. PZZA, I believe is their symbol. Pizza, right? There it is. Papa John's, we're up 6.4% today. They come out with their numbers last night. You spike higher. Papa John's. Pizza demand remains strong post-pandemic. Interesting, right? So they notched some menu innovations. I'm sure you see all the ads out there if you watch any form of television. Earnings per share for Papa John's, 90 cents versus 56. Revenue, $511 million versus 471. For the quarter ended March 28th, net income rose to almost $34 million per share from $8.4 million a year earlier. Interesting, a year earlier, right? That could have been a good time for them. Pizza delivery, what was going on? Maybe excluding items, Papa John's earned 90 cents, far exceeding the 56. Papa John's trading higher today in a big way. All right, what else we got going on? So we talked about weekly jobless claims. You know, something to keep in mind here, and that's why it's so interesting to see what happens tomorrow. Like Kevin said, and kind of the question's an easy one. Has it ever happened in your lifetime? But I wanted to hear how it shapes it, right? How it shapes how you look at it, because it has not happened in our lifetimes, probably most of our lifetimes at least. And so you become numb to the fact that 500,000 jobs on an initial weekly jobless claim number is great. We beat expectation. But how are there still 500,000 initially claiming weekly jobless claims? That's still a decent number. I mean, the record prior to COVID on any weekly basis whatsoever was about 690,000, I think, maybe 692. We had never seen a number above 700,000 ever prior to recorded data on a weekly initial jobless claims number. We're sitting at 498 right now. We really find out if the reality meets the rhetoric in terms of the expectations tomorrow at 8:30. But you see on the chart, it is a declining trend. But, man, we got to keep going. That's got to keep going. And when you think about we got to add 8 million jobs, we got to make up 8 million net jobs from where we were. We got to accelerate that number in a big way. But tomorrow might be the first step. We had 1 million jobs last month. Expectations are going to be high, folks. We've seen the sell-offs in recent days. I was going to say weeks. But we've seen the sell-offs, you know, particularly the NASDAQ 100. These companies could not have done better in terms of the FANG stocks last week. Maybe there were a couple misses, but they could not have done better. And you just traded down 600 points in the NASDAQ 100 to the tune of about 4%, like nothing. on the best numbers. Now, maybe that's something that we should keep our eye on in terms of we add 1 million jobs, but that's priced in, and maybe the market is pricing in at least 1 million jobs, and there's some optimism of bigger numbers in there. And if we don't see the bigger numbers in there, then maybe you do start to see a sell-off, especially in some of the tech stocks or the NASDAQ 100. Now, NASDAQ 100, you're dealing with some yield woes, right? We've now bounced, and we've pulled yields back to under 1.6%, and still with that move of 130.25 up to 132.20, right? You still have the tech stocks pulling back. So keep your eye on that one. It's going to be an interesting morning tomorrow. Okay, what else we got going on in terms of stocks? So we talked about Etsy, Uber. Zynga's out with their shares, 8 cents a share, a penny shy of estimates. Revenue exceeded full-year guidance on expectations of strong demand for its live gaming services as they exceed on expectations. ZNGA, yes, ZNGA is their symbol. Zynga shares, though, giving back almost all the gains on the open. Look at that. They sell off from 1070 to 1036. Strong numbers, and you're seeing it again. The stock only up about 2%, and those are pretty good numbers in a big way for that company. Rocket out with their numbers. Quarterly earnings, 89 cents in line. Loan volume for the lender jumped during the quarter, but current quarter guidance for the key metric of gain on sale margins is well below first quarter levels. Yeah, look at this, down 13. Let's see what this thing down 15%, okay? Look at this, folks. You are right down to the lower level. I mean, you got to imagine, when this company was going public, right? Dan Gilbert and I have my mortgage through Rocket, Quicken. They're a great company. They do a phenomenal job. The way that their sales operation runs, that's the reason why Dan Gilbert's worth so much money. But you don't just go public and sell portions of your company to the public if you don't need money, if your shares are undervalued. Point being, we were at like peak low interest rate, peak refinance, peak, I don't want to say peak real estate because that's still going, but the refinance market alone, just always be skeptical of that. You go public in that degree. I mean, if we see rising rates, it's going to be a tough one for some of these mortgage companies out there, even if the real estate market continues on fire. Excuse me. Okay, let's jump back to the markets as we finish up this segment, and we're catching a little bit of a bid, folks. S&Ps, look at that run. We just traded up 10 points in the last 3 minutes. S&Ps at 4164. The Dow just made a new all-time high on the futures right now. Did it? It sure did. 34,234. We got the Russell up by a point and the NASDAQ 100 back in positive territory. We'll see, folks. We got the S&Ps up by 4. We got non-farm payrolls tomorrow. We'll go over some of the other stocks with earnings right now. We'll be right back in 3 minutes, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have markets oscillating from positive to negative. Right now, the S&P is back in the red at 4157. The Dow back in the red as well. Dow positive. NASDAQ 100 back in the red as well. Pretty tight trading range so far to start things off. So after the bell tonight, as we're talking about, we get Peloton, Roku, and Square. That's what they'll be talking about in Fast Market coming up at 11 o'clock. What we also get is a couple others. We get Beyond Meat after the bell tonight. So Beyond Meat, look at this chart. Talk about getting a little bit ahead of itself in February, up to 221. You give it all back. Remarkable. Down to 119. You pull up the Analyze tab. We're $120 stock. You're pricing in about a $12 move on their earnings after the bell tonight for Beyond Meat. We also get Dropbox, I believe. Is that it? Dropbox? Yes. About a $1.52 move. Dropbox pulled back from the highs we had of $28.33. They're up with their numbers after the bell tonight. Who else we get? Expedia. $170 stock, pricing in about a $9 move on their earnings. Expedia pricing up to the highs of $187.93 in March. And basically, we've just been chopping around since then. We're trading at $168.92 right now. And who else we get? We get Shake Shack. We'll pull out them. Shack is their symbol. Shake Shack with restaurants rebounding to $138.38. The high bound of about 130. We've backed off to the lower boundary of the consolidation to about 106. Now, Shake Shack, they're priced in a $6 move, so just shy of about a 6% move on their earnings after the bell tonight as well. And then tomorrow we get DraftKings, I believe. Is that right? DKNG? We sure do. DraftKings before the bell tomorrow. This will be interesting. So this stock, you look where we've run. I got a Fibonacci run already in here. This goes back to the lows of November. You run from $35 up to $74.38. We've pulled back to exactly the 50% retracement, $54.58. We've jumped around to those levels, a couple spike lows on this level as well. That area was resistance originally. We were almost up there late November. You were up there in December, up there again in January. You accelerate through that area late January, and we come back and bounce off that area in April, and we're back right to $54.55. And they are pricing in about a $4 move. Not bad when you talk about a $54 stock on their earnings after the bell tonight. Gaming, quite the resurgence in terms of, we thought at one point that sports weren't going to exist for a while. It's back then. I was going to say back it up. So they go public April of 2020 at $17. You trade up to 74. But as I mentioned, we've given back that 50% retracement. We'll see if it makes it to a 618. 618 would be almost 50 on the dot from the lows we had of just this recent November. Okay, what else we got going on? Moderna out with their numbers. Moderna says early data shows COVID vaccine 96% effective in teens is one of the things they talked about. They take in 284 versus 239. The revenue was 1.94 billion versus 2.03 billion. A lot of the talk yesterday, though, having to do with the Biden administration saying late Wednesday that it would back waiving patent protections for COVID vaccines, citing the global health crisis. It's a tough one, folks, in terms of the intellectual property that a company like Moderna has and what's at stake with a global pandemic. And there's no exact line of where that falls. You don't want to have the government just coming in and saying, we got to take your intellectual property. But in the same essence, if there's one company or a couple companies out there with intellectual property that would allow vaccines to be made at a greater pace for the world, for India, etc., maybe that's something we have to come to grips with. I mean, as a society, we've basically deemed that monopolies are illegal because they do not serve a greater good for the whole, right? If one company and one businessman or woman did everything they could, built a phenomenal company, built it so well that nobody could even compete with them, we've made the determination that monopolies are anti-competitive and not good for society. So we've made them illegal. Just bringing in the conversation of there's certain things when you get society-wide, those conversations do exist for the greater good of the greater whole. And in this case, I'd happen to agree that, we got to get those vaccines out, folks. India's through the roof. And if we get some variant that is able to morph from some of these cases, even those that are vaccinated, myself included, would then become vulnerable again. That is kind of the fear there of getting over this thing. And we don't want anything like what we've done for the last 14 months. It's a tough one. You go back and forth. And I understand both cases. I really do. Moderna, shareholders paying the price, $185 down to $147. Now, the news was already out with the vaccine and the Biden administration putting the waiver out for the IP yesterday. You were at $165. You just dropped $17 and another 9% on their earnings last night on the extension of that. So not all having to do with that, but just an extension. And man, talk about falling from the wayside. I mean, the lower end of this consolidation is 120. There's nothing stopping this in between. Testing this area. We were down there in late March. We were down there in the beginning of March, and we're at 147, off from a price point of 188 in a matter of 3 days on that equity. We'll jump around to some of the other stocks for the vaccine. You got Pfizer shares. They are lower as well today. Continuing that drop, Pfizer, $38.60. They're down 2.3%. Johnson & Johnson down just 0.25%. You see the difference there. I mean, Moderna, they probably had a lot more to gain from that intellectual property. That's why they've paid the price more substantially than a company like Pfizer that has a lot more going on and maybe not as much to gain, especially J&J, as J&J barely off the price they were at of $168.40 yesterday. All right, back to markets. S&P's flat. Let's jump to commodities. Crude, giving back some of the gains that we had this week. We're up to 66.76. We're trading at 65.19, all things considered. Crude holding up well. And look at this. Gold. How did I not see that one in gold? Shame on me. Gold on the open. What's going on? Let's put it on a 5-minute. It's a straight shot from 1792 to 1809. Man, oh man. You get that gold contract. That's quite an acceleration there in a big way, with gold continuing to trade higher. Look at that. All right, those gold bulls. Gotta love it. If you haven't tried out my dad's gold report yet, folks, head on over to the front page. Great time to try it out. Everything we do, you can get a 30-day money-back guarantee. My newsletter as well, Rocket Equities and Options, on the front page as well. Everything we do on the newsletter tab. Try them out. 30-day money-back guarantee, folks, on every product we offer. For new subscribers, if you're new to TFNN, I encourage you to check it out and check out the Tiger's Den as well under the services tab on TFNN. Okay, let's continuing. Notes and bonds. So quite a move that we've had recently. When you look at the bounce we've got from the floor that we were at of 130.25, you back things up on a 3-year weekly. We look where we are. Now, this was really a run here from 117.13. That backs us all the way up from October 2018. We reach a high during the COVID pandemic right at the start of 140.24. Interesting that we're chopping right around at this 382 retracement, folks, right? Look at that action. Remarkable. When you look where we are, in terms of we've had the pullback that's going to deal with rising rates, et cetera, and we're just oscillating right on this 382. We'll see if we continue to chop near that level, but not a coincidence, folks. Technically, if you start following enough charts, I mean, if this market was cascading beforehand, you better have looked on this chart and realized that the next area that we may get some support was the areas we had from the highs, because areas of resistance turn into areas of support, folks. Doesn't happen every time, but man, I mean, look how clear that is on this chart. Where does the free fall stop? The free fall stops right where we last had resistance. which was the 131.24 area, which also correlates to the 382, which is pretty awesome. And yeah, we've chopped around there now in almost 2 months. 10-year 20. We'll see if we get some tomorrow on the non-farm payroll number, and I imagine we'll cross the see you folks right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of Norwegian cruise lines up here. They're down about 3.2% today. They were out with their numbers. So Norwegian saying that the cruise liner reported a slightly smaller than expected quarterly loss, while first quarter revenue well below analyst forecasts. But here's the key here. It also said a midsummer restart for cruises could be in jeopardy, given the time needed to strike an agreement with authorities and get ships ready to sail. You miss the summer, you're in trouble if you're a cruise ship, right? And that just might be the case. And even if you hit the summer, what's that summer going to look like in terms of revenue, in terms of capacity, et cetera? I tell you, I mean, you're going to see it happen, folks, because until I get on a cruise ship, the only way that's happening is, number one, if people are vaccinated or if they have a negative test and they get on the cruise ship. That's the only way that they're coming anywhere close to business as usual, as we have cases still persisting anytime soon. And I imagine you may see that happening a little bit more often. I mean, movie theaters, that's going to take some time as well. I'm in the state of Florida, folks, and we don't have the caseload down at all. And so you're going to see potentially some of these businesses that care about profits and their employees trying to bring people back. And when you're in the closest of quarters, we'll see how that shakes out. But I imagine that's something that's on tape for sure. And we'll finish up with Viacom. Viacom in the positive, but they give back some of the gains here. We just checked on them. They're slightly in the red. They beat by 30 cents a share of $1.52. Revenue above estimates as well, thanks to higher affiliate fees and improved ad sales. Viacom, they've been in the press because of the one and only Archegos, however you pronounce it. And look at that give back. Whew. Talk about not a good opening for that stock. You got Viacom giving it all back flat right now at $39.09 after being up at $40.50. The other company that I always keep my eye on, Discovery as well, they're positive about 0.5%. Now, both of these equities really paying the price. If you were thinking about getting into these, folks, you could start to dabble here because they're both solid companies. They have a future in streaming, and there's no problem with dabbling. Do not start a full position because the volatility here, they might be trading lower, but not a bad price when you were just trading almost double these prices across the board. All right, folks, stay tuned. We're going to have Basil Chapman coming up next. Fast Market at 11. Don't miss them, right? Talking about some good stocks on there with earnings coming up. And, of course, Larry Pesavento at 12. Steve Rhodes at 1. Dave White, the Power Trading Hour at 2 o'clock. Tom O'Brien, my dad, live at 3. Live programming all trading day at TFNN, folks. Stay tuned. Basil Chapman's coming up right now with the opening call.